software, so it's just I don't know. I'm gonna have to spend some more time looking at it.
Okay, we're live now. Okay, I'm gonna stop the intro. And all right, guys. Okay, the classical sound check before we start. Who is our official audio check? Borgil Sky. I think Borgil Sky was banned from Twitter, Kevin.
Oh yeah, what did he do?
I don't know.
You can get banned from Twitter these days for doing not very much, can't you? Sometimes.
Yeah.
Okay. Well, good evening, everybody from the UK. Hi, Patrick.
Hi, I'm with Kevin once again. Yeah, we tried doing it on Kevin's software, but as soon as he figures it out, there will be. Hopefully, I'll be delegating the arduous task of setting up this the YouTube live stream so Kevin could take over. Okay.
I've been trying for a couple of weeks now to try and get the streaming software to talk to my HP computer, and it doesn't seem to want to. So I'm going to end up throwing the computer out of the window, I think, at this rate. But we'll see how we get on. Okay, Patrick. Well, I'll tell you what. I'm going to keep an eye on the questions on the live chat.
Okay.
And if you want to kick off with a few charts, we're just kind of freestyling it a little bit today. So I'll react to people's questions if I can.
So, I put like a clickbait title there. Is it the end of the bull market? The answer is no.
I sure hope not. Otherwise, we're going to have to look for something else to chart.
Yeah, it's like really not the end, but it feels when you do it every day and you look at charts and then you see the correction and then the daily chart correction and then you start seeing some bearish signals maybe on the weekly chart and then you start. This is I could pop up any of the old like silver charts and we'd see that sometimes at 3, 4, 6 months consolidations easily after the like. It went parabolic and then corrected 30-40% and then went sideways for 6 months. So this is like not out of the ordinary what's happening right now. And okay, already questions. So might as well let the people decide where we're going. Who's that? I saw one pass by. Was Jesus? Where is it? Canadian? I don't know. Did you see something interesting, Kevin, on the chat?
I'm just sorry, I'm just distracted. I'm no good at multitasking. I'm just saying
gold and silver
to see everybody here.
Eric Kogo wants gold and silver. Okay, so we could let's see if I could do it live.
It's always good to start off with a general look at gold and silver charts, I suppose, isn't it, before diving into the miners.
And what I'm going to do, and I'm not gonna, let's just look at the monthly chart. So the monthly chart. Right now, the distance, okay, so this, I always go to the monthly chart for the simplicity, for the level-headed approach. 1 year moving average is like, you could touch it, you could get scared below it, but you don't want to close really below the 3-year moving average. At least during the last bull run, after we had that bullish cross, it went up nicely and really respected it nicely. So I'm expecting same type of performance this time, and it's kind of doing it already. So you see, we're pretty close to like 2001, same type of angle of ascent. We're above the 1 year moving average. And look at all these occasions, guys. That's why take comfort in the, oh man, okay, my PC, click and drag. And right here, you see it came back after going a little parabolic. It went back 1, 2, 3 months, even below the 1 year moving average. A lot of times it really took its time to get back 3, 4, 5 months.
So. Got Arthur asking about Ripple, which is obviously one of the cryptocurrencies. If I'll try and remember to have a look at that when I'll share my screen in a little while and look at 1 or 2 of the cryptocurrencies, Arthur. So hopefully I'll remember to do that. Sorry, carry on, Patrick. Yeah, I mean that little correction at the moment that we're going through just at the moment, it is really just a little correction when you look at the chart on that scale, isn't it? It's perfectly normal price action, very bullish looking sort of pullback. It's what you want to see in an uptrend.
Exactly.
Bullish pullbacks have a very unique appearance to them. you compare them to the ones on the left-hand side of the chart there in the bull market between 2000 and 2011, it's got that very similar appearance, whereas the drops between sort of 2012 and 2016 had a very different appearance to them. They just kind of disappeared off the bottom of the chart, really, whereas this one's just very it's just a technically classical kind of bull market pullback. So
Exactly.
Nothing to sort of concern ourselves with.
Oh, you want to say hi, Casey?
Hi.
You've got company.
What's that friend called?
Kevin.
Kevin?
Yeah.
It's
There's
me.
a lot of people listening. You want to say hi to everybody?
Hi.
Okay. All right. I love you.
So, I want to play Super Smash with Maple. I want to play Maple Smash Balls.
Yeah. Well, Casey, not right now. Okay. Go see your brother, please.
Please.
The joys of doing a live webcast.
Yeah. And yeah. So hold on, Kev. You know what I'm gonna do? I'm gonna let you share the screen, and I just take care of my little boy there, and I'll be right back.
Okay, I've clicked on share screen. I don't know if you need to click on a permission at your end, but
True.
come up.
Let me stop it. Okay, stop share. Okay, now Kevin could take over the share.
Okay,
And-
it should be working. Okay, with a little bit of luck, guys, the screen share is about to come up. Right, okay. Okay, so I'll pick up from where Patrick left off there, and we'll take a look at the silver chart. Just bear with me a moment and I'll get silver. There we go. There's the silver chart. So a lot of green on the miners and on the charts today. So here we are with silver, and it's a very similar look to the gold chart in that we've got a corrective channel or a corrective wedge, depending on your view at the moment. If I just zoom out a little bit and look at the 5-year view, you can see that this is all contained within one of the arcs that I'm so fond of drawing. You'll have to bear with me for not keeping up with the chat at the moment, because I'm just looking at the monitor, sort of talking through this. So I'm not ignoring you. I'm just trying to concentrate on this. So the silver chart, little bit sort of undecided, I suppose you could say, as to just how far we're going to go with this pullback. I've identified somewhere around about the $19 level there as being perhaps the lowest that we might see on this pullback if the price does spike all the way down to the resistance on the arc here. But there's nothing that says we do have to go back quite that far. But I think time-wise, mid to sort of late December is perhaps where I'd expect this sort of correction to bottom out. But we have seen some encouraging signs today. I just don't think that what is happening at the moment is likely to lead to an ultimate breakout. And if I go to the gold chart, in fact, the chart for the miners, GDX, I was looking at earlier on, perhaps explain why. You might have seen this chart on my Twitter feed. I put it on there a couple of hours ago, and adjust the time scale so we've got a little more detail in here. Now, I'm never too sure just how familiar you all are with technical chart analysis, really, but I try to keep it as simple and straightforward as I can, and put as few lines on the chart as possible, just to try and not overcomplicate things. But the primary pattern at the moment is just concentrate on these two black lines, and it's a descending channel, which basically means that the price action ever since August has been contained within these two lines, apart from one little candle that just popped outside there. That does happen sometimes, and there's nothing in the rules, if you like, that says that you can't have the price just for a short period of time sort of violating these lines and moving to one side or the other. But generally speaking, the price action needs to be contained within the pattern that you're sort of saying is the sort of valid controlling sort of chart pattern that controls the price movement. So what's happening at the moment is that we've hit the bottom rail, and that, as it happens, also coincides with the arc that I've drawn on here. And these arcs are subjective because the arc could be here, it could be out here, and it's not until you start to get some confirmation on the right-hand side of the arc that you start to be clear about where the exactly where you place it. So it's something that develops kind of organically with time as the price action builds out. So at the moment, all we can do is kind of theorize or speculate that the arc would be in that kind of a position. Because we've had a confirmation down here at the bottom and the price has bounced off it. So if I've got this right, it's likely that price is going to continue to move upwards over the coming days, next week, and perhaps for a week or two, until we encounter the top rail again. At that point, you've got two choices. Price can either break out to the upside, or we see a downside reversal. And given that the cycles experts are looking at an intermediate cycle low being ahead of us rather than behind us, that leads me to think that we're going to see the bottom of this arc tested. And if it's an intermediate cycle low, which is one of the more sort of severe cyclical lows that you can very often get a sort of a panic at the bottom there, and price spikes, and you get a sort of a spike low, a little bit like we did back in March, where the price went all the way down here, didn't it? If I change the scale right the way down to the bottom there, and you get a panic like that. So it wouldn't surprise me at all if the price broke down below this arc and was caught by the bottom rail, something that I've seen happen quite a few times. And obviously at the moment, again, it's just a theory, I'm just speculating, but it kind of fits with the idea of an intermediate cycle low. So we get a very rapid intraday spike down to here, which if that happens, then that'll be time to kind of back up the truck, as they say, and load up with miners if you aren't already loaded up. But either way, price will reverse. I'm very confident the price is going to reverse in December, whether it's mid-month or late in the month. December often sort of historically marks a low point seasonally, with price accelerating after Christmas and into the early part of the new year. So I think we'll see some rapid gains in the miners into the new year. But at the moment, we've seen some good moves today. Some of the miners, I think it was Silver One, I was looking at earlier on, they've had a very good day today with price moving up. I think at one stage it was around 10%. They're up 8% at the moment. And you can see on the yearly chart, if I just adjust it, there we go. Again, I kind of get the feeling we might not be quite there yet with the stochastic indicator. It might just have a little bit further to drop. So when we get up to this resistance line, it wouldn't surprise me if it just turned down and we had another little bit of a drop whilst this indicator bottoms out. But we're getting closer to that turning point, and that's the case with a lot of the miners. If we look at, I've got Sabanier on there, let's have a look how they're doing. So again, a little bit of a sign of an uptick here, but it could easily continue just down a little bit further as we move into December, and form a more sort of definite low sometime in mid-December here, down in this sort of oversold zone, if you want to call it an oversold zone. And looking at, so we look at Novo Resources, another one there, perhaps a bit more optimistic that we've actually seen the low with this one. Again, it's bounced off the lower support rail. So they're all at slightly different stages of their sort of cyclical behavior. Heckler Mining has broken out of a bull flag and is just back testing it at the moment, which is always a bullish sign. Looking at the Silver Juniors Index, we're still contained within an expanding wedge pattern, with the stochastic indicator starting to get what might be quite close to the turning point again. So it's just generally, to me, adding up to perhaps a little bit more weakness over the next 2, 3, 4 weeks, with price action going up and down a little bit more before finally breaking out. But don't forget, a lot of these miners are very close to really important breakout levels. I mean, that's the Silver Juniors there. If I zoom out on this index and perhaps zoom out a little bit more, you can see just how important this resistance line is. put it onto a scale that makes a bit more sense. You can see this upper resistance level here is really, really important. It goes all the way back to 2013. So a breakout here is going to be sending, a really important signal to the markets. So it's not surprising that it's taking its time to make that break. Let's have a look at IM Gold, perhaps. Let's see how they're doing. Zoom into the 1 year view. And you can see this again, this bottoming action with the stochastic indicator, where we're now getting into this zone here where you would sort of think about getting in if you weren't already invested in this share. That this is a buy zone, and price is down here like it was back in June. You sort of buy at this point, just before the breakout or around the breakout, whilst you're in this oversold zone, and then benefit from the move upwards, which in this case was from about $4.50 all the way up to $7. So what's that? About 75% gain in the space of a few weeks. So these resistance lines here, when they're broken to the upside and this indicator starts to turn, that's the time, obviously, to get into the stock. I'll just have a little look at the chat and see what questions we've got. So let's see.
It's mostly me that's been chatting away.
Oh, okay, Patrick, you're very quiet. So I was half assuming that you were still looking after your little one there.
Platinum. Did you? I think platinum's getting to be a hot subject.
Okay, I'll have a look at the chart. It's not one. I'll be honest. It's not one that I look at very often. I do occasionally, but let's have a look at platinum. Platinum. US dollar. That one will do. Okay, zoom out a bit. I always have to look at the big picture first and then zoom in. It looks promising, doesn't it? Looks like a descending wedge straight away. Put the resistance line on. Okay, that's the resistance line. Support line. It looks like we had a break below. It looks like a false breakout. So sometimes, right. Okay, so some of you might be looking at this thinking, how do I draw these charts? So what I did there was, with the top line, it's fairly clear where that resistance line should go, because all of the candles line up quite nicely, and you just have to find the best fit. It looks as though you can't really bring it much lower than that at the moment. Balance it on the top of the wick and bring it down so that it makes contact with the maximum number of candles, and it's kind of just about there, so that you've had contact here, and here, and then again here. With the bottom one, it's not quite so clear, because if you just line up the two extreme points, it doesn't have much confirmation. You've only got one here and one here, so that to me isn't a very good fit. A better fit is if you bring it up here like that. So you've got this point here, which is very close to touching the bottom line. Then you've got this whole series of candles, one there, one there, one there, one there, one there, over and over again, confirming that that's where the line should go. And then all of a sudden, price spikes way down here and back up again. And then you get another confirmation of the line on that red candle there. So that bit there is what I'd call anomalous. It's kind of going outside of the established pattern.
Yeah.
So therefore, you wouldn't necessarily need to take that into account. You could, though, put a line in here like that, which does take that candle into account. So all you're doing, neither of those is wrong. They're just they're support lines that have different levels of compliance. This support line here only has two confirmation points. Well, two there, I suppose, and two there, two or three there. But there's sort of 2 points in time where the line has been confirmed, whereas this one has one, a big one there, two, and then a small one there. So the lines are given their validity by the number of times that a candle kind of respects the line, and that's what gives the line its strength. So that line is stronger than this line, but they're both valid, and they would both provide resistance. but to different levels. So I hope that kind of makes sense.
Yeah.
Um,
Well, you're right, Kevin, because I didn't have that in my arsenal a little while back, and understanding that false breakouts do occur, and you have to account for them. So when you draw your lines, you kind of have to see, okay, look, that's a false breakout. It's an anomaly. It's not supposed to be there. And a lot of I saw Grady do that a lot there with his false breakouts, and then it really changed the way I drew my lines. Now I started drawing more like pivot lines where the touch on the other side also creates validity to that line, right? As long as touches come and they really bounce off a specific price action point, whether they come from the top or the bottom, that line has value. And if you're above that
yeah,
line, then it's support. If you're below that line, then it's resistance.
that's it. And don't let people tell you that just because when you put a line on the chart and someone says, "Oh, that line's not valid," or "That line's not valid," they're all valid if they're joining together points that are demonstrating a support and resistance. Every one of those lines is valid, but it's just that some of them are stronger than others. So you can think of it like I don't know, like a floor, a floor in a building, and as you're walking across the floor, it might be stronger in some places than others. If the floor was made out of thin timber, it might collapse under your weight. But there may be parts of that floor covering that are particularly strong, and there might be areas that are weaker and would give way if you put some weight on it. And it's exactly the same with the price action on here. If you give it enough of a push, the price will push through it, and it'll push through that line. It's not a solid line that can't be broken. It's a line that is there to provide some support. But if the selling action is too strong, then the price will push through that and spike below. But if the prevailing trend is going to be upwards, then the price will rapidly reverse, and the trend will start to move in the opposite direction. Simply because buyers have overwhelmed the sellers at that point. There are no more sellers. The buying action overwhelms the selling, and off you go in the opposite direction. Some of this has been shown really well in some of the cryptocurrency charts over the last few days.
Kevin,
the Bitcoin. Yeah, sorry, go on. Yeah.
Well, if we could leverage that, if you can talk about cryptos, I've been asked about XRP. It's like a
Ripple. Yeah.
Oh, that's called Ripple, XRP?
Ripple. Yeah.
Because it's a new thing, Ripple, right? Yeah. Or am I too late to the party?
Well, no, you're not too late to the party, but I think there will be a consolidation coming very soon now. We've had a very strong move, but all of this is just the beginning. If I zoom out on Ripple, sorry, I've got my, let's get that. There we go. Right, so this is the big picture for Ripple. I will start with a big picture just to sort of set where you are. So the all-time high is up around 52 cents, something like that. We've got a major horizontal resistance level. In fact, if I put the volume on, it should show up on the volume. Let's have a look at the volume profile, visible range, see what we get. Go. So most of the price action has been between, well, obviously between, where are we, about 18 cents and kind of, I don't know, 30 cents, with all of this sort of price oscillating within that range and creating all of this, all of this volume. We're now starting to move out and upwards away from this heavy volume area. So we should, with time, find the price starts to accelerate away to the upside. But we've got this, what I've identified here, just with some turning points on the price action. Here, price was rejected. Here, price was rejected, and here, and here, and here as well. So I'm expecting to see a zone of at least some temporary sort of consolidation in here, and that's where we're at now. In fact, I did this chart weeks ago. I can't remember when I did it, but I've written on here that pause is likely here first. If I zoom in now, I'll get rid of the volume. It's just putting too much of a mess on the chart. So we're up into this zone now. So I would expect a consolidation. So what happens at these sort of points in time is that the consolidation will take place either just below or just above your resistance level. If it's a clear resistance line, the buying pressure can push price through that resistance level, and then you get it coming back down and it consolidates above the line. Also, it's very common for the price to consolidate just below the line. If I get the scale so it's a little bit clearer to see. Okay, so it looks to me as though that's what's happening here. We're just starting to see some signs now of some sort of pullback consolidation taking place as we're getting into this zone here now. How far will it come back? I suppose it could come back down to sort of 30 levels. That's a 2-cent drop. So that's about 6 or 7% drop from where we are now. So you could see something a little bit like this. And this is just you get this kind of thing as well. I don't know if you noticed this before, Patrick, but you get this kind of pattern here that kind of marks the sort of whether this is going to be a channel or whether it's going to be a pennant of some sort. But you always get this kind of price action here between the two candles. I don't even know what you call it, but that marks the sort of starting point of your consolidation. That shows up on a lot of the charts. So that's kind of what I'd expect there. And then for price to make a renewed attempt to break to the upside. And this is where the indicators can come in handy, of course.
Even I could see, even if you connect the dots at the bottom there, you could kind of get a trend line there, support trend line from the.
Yeah, that helps as well.
Yeah.
That's another technique for kind of trying to figure out just where you might possibly move down to.
There you go.
Something like, and you can have an expanding wedge, you can have a contracting wedge, which typically called a pennant, or a descending bullish channel like that. So when does that take us to? That takes us to 22nd of November. So what's that? Sunday, isn't it? So that helps with the timing. I mean, these support lines, they don't always, they don't hold forever, but for a short period of time, for a number of days or weeks, these lines will hold until it's broken to the downside in a more significant sort of cyclical correction, or price accelerates more rapidly away to the upside and you get a more steeply angled support line. But they can be very useful in the short term. And of course, if price does fall below this, then that's an indication that we're going to see something a little bit more substantial. And all of these smaller patterns fit into a bigger pattern as well quite often. So you sort of zoom out and find how all of these fit into a larger pattern. It might be an expanding wedge or something like that. It varies from one example to another. I think Ethereum's done very well today, up 7%, passed through the 500 level. I mean, this is absolutely crazy, this chart. I mean, I drew this. Don't know about you remember, Patrick, when I first sort of put this chart up about months ago now. I can't remember when it was. It was when we were breaking out of this wedge back in April or something, May time, and I sort of realised that it could be an arc in the making. And so I put this chart out there on Twitter and sort of suggested we might be at $1,400 by sometime the first half of next year, and it just seemed crazy. We were down here at, I don't know what it was at the time, a couple $100 or something, $200-300, and now we've sort of doubled already, and we're well up into this orange zone that I'd identified, and it's can you believe it? So people ask me, are these arcs? I think somebody put on Twitter today, are these arcs real or are they just made up? Is it a genuine trading technical analysis kind of pattern?
Yeah. Like if I could add
cups and handles have been well sort of documented, but I think I've just kind of picked up the idea and kind of run with it.
That's like, if I could add on like the arcs there, when I first saw you starting to do that, and then it's like the arc, you have to realize it's like it has a lot of technical attributes in it, because the arc going down is telling you the angle, it's telling you that you're trending downwards, the left hemisphere. But as the bottom of the arc starts flattening, it's also, and the price action touches it, it's also telling you that the rate of change the steepness of the sailing is slowing down. So it's telling you a whole bunch of clues just by that line. And when the line starts going back up and you start hitting it once or twice on the right hemisphere, it's actually telling you that the trend is higher lows. It's actually telling you that the steepness is accelerating. So that's why these reverse symmetry moves, they were great. Like we look like magicians, but it's just a momentum that's rebuilding up. And the arc is, with its technical, it's just supporting what's actually high. And you know how it is, you're the first one to get in, let's say in cryptos, and then you tell your friend, and then you start seeing commercials, and then your grandma buys it. Well, that's why you have the exponential type of moves towards the end of the arc where everything goes up higher, because it's all that human, all that human traits of people buying in at different phases. So for me, like the arc is a one-stop shop. When they do hold and you have those two bounces on the right hemisphere, it's everything all in one. It's a moving average going up. It's just great stuff, guys. And I've seen them hold over and over again there.
They work great looking back in time. It's sort of people kind of say, well, that's kind of only any good if you're looking backwards, but it's not, because once you start to get a touch on the right hand side here, that helps you to place the arc. As soon as we got that spike there and this breakout from this wedge pattern, that was when the arc became kind of fixed. So really back in March of this year, it was possible to forecast this. You could draw the arc and you could forecast that the price would stay at least above that line. So you can put your cursor on the line and you can say that by October 2020 the price wouldn't be any lower than $300. I can put my cursor on here in the end of this year, 29th of December. The price isn't going to be any lower than $640, unless of course the price breaks down and does something ridiculous like this. But as long as the price is just bouncing off the arc, then it's confirming that this arc pattern is valid. And you can look at how price behaves when the stochastic indicator gets into this white area above the purple shaded area. It rapidly moves upwards and moved from 150 to 360 there. So the price doubled in a very short space of time here. Over here, the price moved up from, just in this white zone here, the price moved from here, which is $177, until you got the bearish cross, which was $270. So there's a $100 move there just in a week or two. So we're getting into that zone now. So the longer it stays in this white zone, it stayed in quite a while here, and price moved from $200 up to the top of that spike, which is $490, so more than 100%. So we're just getting into that zone now. So we're starting off at $440. So my guess would be that we make $800 whilst this indicator remains in this white area. It only moves slowly. So we've got, a week, 2 weeks, 3 weeks of price moving at this sort of rate that we're at now. So it could easily reach $800 by the end of this year. This arrow, if I just grab hold of the end of it, it could be more like that. It could be at $800 by the end of this month, and then you get the pullback. That comes all the way back for a couple of weeks in tandem with gold and silver dropping into the middle of December, and then boom, off you go, $1,400 by February, March. So it's a long way to go. It's another $1,000 nearly from where we are now, but that's what the chart's saying. So respect the chart is what I'd say. I mean, the GDX chart has me a little bit perplexed on this score. It's out of all of the arcs, it's the one that I struggle with the most. If I just clear all of the annotations on it, all of the drawings, and zoom out, this is the one arc that I just can't quite. I don't know if you've looked at it very much, Patrick, but it bothers me a little bit.
Oh yeah.
That it doesn't fit. The left-hand side is perfect, but this right-hand side is messed up.
Try the
it's
quarterly.
messed up because if you try, okay, I'll try with the quarter. I mean, this is the monthly, isn't it? I mean, usually the monthly is fine, but
Oof.
I had it there, and it was behaving really well until March, and I had that down as an anomalous low, but it's done it again. You know, it's broken out of it. So what do? Do you drag it to there, or do you drag it more likely to
Yeah.
there?
Well,
Which I'm afraid does sort of indicate that we've got another. I suppose it's not too bad, is it? You know, 32.
yeah.
That's another $3. What's that? 10% or less. So it would be perfect if the price came back and touched that. Got the arrow on here. I don't want the arrow. A solid line, so it stands out a bit more. So something with the channel, isn't it? So it's something like that. That would be perfect. And then I'd be happy. And then price would accelerate up here and out, and give us the
Yeah.
$54 that I've been looking for since since about March of this year, since we started this move. I was expecting $54 to come a little bit more quickly, but we've got this correction. So yeah, that's probably this whole zone here, I think, was just the price was kept away from the edge of the arc, but we didn't know it at the time. I had the arc back here. But this is a good example of how, you know, you have to constantly adjust your charts and adjust your thinking. You can't just go, oh, well, you know, the arc is there and all of this price action since means that, you know, the arc theory is just, or the cup theory isn't valid anymore. Well, it is, because we just had it in the wrong place. It should have been there.
And I see on the stock, you have a kind of a pivot line that that's gonna, that it might hit there. So if close those, a little closer, higher. Man,
Yeah.
I wish I could control your right, like there's one there, and I saw another one from the 2020 high going downwards.
2020 high. If I get rid of it, I don't want it to be an arrow, so I'll get rid of that.
Can I
going down? What, down here? You're looking at something like that?
No, well, 2000.
The 2020 high is up here, isn't it?
Can I take? Is there a way for me to control your mouse?
I can probably let you share it. Just before you do that, though, I was going to put the quarterly chart on.
Yes, please.
Just to see how that changes things. Makes things a little bit cleaner, maybe. Let's have a look. Well, you'd have to take it to here, wouldn't you? I suppose, if you're going to contain that that wick, that candle.
Well, it's the close. So sometimes, I've been testing on the arc. It's it's kind of weird on the quarterly chart because the width of the candle. So that green open.
Oh, it's the middle, isn't it?
Yeah,
it's like that.
It stick out. It's always going to stick out. The green.
Yeah.
I'd actually put it on the low of March, the close of March.
Would you?
Yeah. Well, okay. I've been testing both, but it looks ugly, right? But yeah. Okay, you could put it like that. That's okay.
Yeah, it's jumping around a little bit. It doesn't move very smoothly. So that still gives us some room to move down to 32, 33, something like that, which wouldn't be the end of the world. Do you want me to see if I can let you share my screen? If I hit new share.
Or not share, but okay. Control.
I'm going to have to stop. I don't know.
Can I control your mouse? Request remote control. Hold on.
That would freak me out. Oh, yeah. Okay. I'll approve that. There you go. You can probably control it then.
Wow. Is that you? It's me, right?
Clever. That's you. Yeah, that's you.
I'm going to post a Twitter chart under your name, but me doing it.
Well, as long as it's a good one, I don't mind. It better be good.
Okay. Let me... Is the mouse wheel going to work? Oh, it works. Okay. I just wanted to show the what I was seeing. More something like this here, there, where we should bounce maybe on this and maybe stay in the power zone. Not a lot of touches, right?
Oh, I see what you mean. Yeah. Well, as long as it stays above, I think 60, somewhere around a reading of about 60 tends to be the you want it to turn at around about that sort of level to stay bullish.
Right? Because we don't want it to go too low, right? Because that's going to be a strong pressure. Like you want to really bounce, and there's probably going to be max fear right here. So sometimes I have a tendency.
Sorry, go on, Patrick. Go on.
I have a tendency to cheat a little bit. I know, like sometimes you want multiple touches, but sometimes I kind of try to anticipate. I won't base like a trading decision based on a trend line that hasn't been touched a lot of times, but it gives me a ballpark. Like this would fit with the premise that we're in a bull market in precious metals, that we should bounce. You don't want this crashing down, right? Because that's a lot of damage. Who knows where the price action is going to be if the stock goes down here, there.
Absolutely, yeah. I think someone was asking about Abra Plata, so
I'll give you back.
Have a look at that.
I can find it on my list. Control.
So well, I've still got control, so I think we're both able to control it at the moment.
Okay.
Right. So let's have a look. Well, I'd be very optimistic on this. I think who was it that mentioned it?
It looks great.
Someone mentioned it was Stuart. I think it might have been.
Abra's been very frustrating.
It's been frustrating. He says it's been frustrating, which it has, because ever since August, it's been trading sideways and hasn't gone anywhere really. I mean, we got up to 47 cents and we're trading sideways and we're currently around about 30. But in the big picture, it's a bullish pennant. And not only that, but if you look at the stochastic, it's in a good position to start turning up and support a breakout. We've seen the price bounce exactly where we needed it to on the lower support line here. This middle line, by the way, is a long-term. If I just zoom back out again, well, there you go. You can see you've got a long-term sort of resistance area here. I'll just mark that in there as a place where I thought the price would consolidate. So before all this happened, I had this rail up here, and as price was going up, sort of thought that this area, this zone in here, was probably where I would see a consolidation. Of course, that's happened now, so I can get rid of that line. Just leaving the flag and the all-time highs. So we've got if you work out the target, you've got what's that, 0.04 and so 47. So you got 43 cents to add to the breakout. So 43 and 36. That's 79, if my maths is right. I'm trying to do it in my head, 79 cents. So that takes the target way up here, way through the all-time highs. We may well see a consolidation pattern forming. As I mentioned before, you quite often get a sort of break through the major resistance. That's an all-time high, so I'd expect it to come back and test it from above. So when we do break out, if we move up to, I don't know, well, the target, what was it? I said 79, which is in this sort of area here. I think with gravity, it'll bring us back down to the resistance line. By then, it'll be a support line. And we'll probably spend a little bit of time just testing that support line before taking off again. The timing on this looks as though, January is going to be a pretty exciting month for Abra Plata, doesn't it? And then perhaps a little bit of a pullback, and then another rapid acceleration away to the upside for a few weeks before the precious metals complex cools off a little bit, because I think this next run is going to be quite rapid. Probably worth looking at the dollar. Do you think, Patrick?
Yeah.
The dollar chart, because that's got a lot of it's kind of behind a lot of this price action at the moment. So I'll just find it.
There's Kevin, somebody asking there. I remember remember David Hunter's targets. Have you been aware about David Hunter's targets on Twitter?
What is his? What's he saying?
Hold on. I'm gonna copy what Dominic he says. He's calling
I've got the chat open on my screen at the moment.
2,300 to 2,500 gold, and $35 to $36 silver in the next month or two.
The same targets as mine, but I would have said February for those targets. I don't expect that before Christmas, but I do expect it soon after. This is why, if I just try and, this is why, combined with what Norvast is saying on Twitter, who I hold in high regard. He's one of the cycles analysts. His work on dollar cycles and precious metals cycles has been really, really good, and has been pretty valuable to me over the recent months. So here we have the dollar chart, and the lines that you're looking at here. Well, if I zoom right out, it might give you a big picture view first, just so you know what lines you're looking at. So the red line is the one that goes all the way back to the dollar cycle low in 2011. That's the red line. And the black line is the one that goes all the way back to the peak at around about 103 in this dollar cycle high. You look at the stochastic there and you think, oh, right, okay, it's turning and we're going to go back up here. But look what happened in the last dollar cycle low. The stochastic indicator stayed in this zone from July 2006 to June or July 2008, so 2 years down in the bottom here. So if we're in a dollar cycle low, and I've got my calculations correct, then this stochastic indicator is just going to bobble around in the bottom here for another couple of years. So zooming back in, now that you know what the lines are, and I'll just expand the scale again. So remember that red line up here is the support line that goes all the way back to the low in 2011. So that support line has given way and we're now below it. We've passed through that support line, and what's happening here is that price is trying to, it's acting like a magnet. The price doesn't want to fall away from that red line, but the dollar cycle is pulling it down. This black line is a trend line going back to that top and at 103, and it was a resistance line. We pushed back through it here, and it acted as support, bounced off, and we're back through, back above, back below, and this battle's going on with, you know, the bulls and the bears, if you want to put it that way, in the dollar market. And there's a battle going on between those that, you know, sort of perceive a dollar bull market and those perceiving a dollar bear market, and everything that's going on in the world in terms of the fundamentals behind all of this milkshake theory and everything else that's going on. I don't care about any of that. All of that is reflected in the chart. So when people sort of ask me questions about milkshake theory and what's happening to dollar supply and demand, I don't actually care about any of that, because it's all, the reality of that is reflected in this chart. That's the beauty of technical analysis. You know, it doesn't matter what theories anybody has, the reality is there on the chart. So if this price line starts to move substantially away from this black line, then that's mounting evidence that we're in the terminal phase of this. We're in the terminal phase. We're in the sort of major phase of the dollar bear cycle as it drops way down over the next couple of years. But before that happens, I think the red line is going to drag it up one more time. The intermediate cycle low in gold. Colin Norvast strongly believes is still ahead of us, and the intermediate cycle high for the dollar ahead of us as well in December. That might be right, it might be wrong. If it's wrong, it just means that the dollar is going to turn down now and keep on going down into its cycle low, falling ever lower and ever lower. And if it's wrong, it also means that gold is going to break out, silver is going to break out, and that bull market is going to resume sooner rather than later. But if he's right, and I think he is, then the dollar index will have one final attempt or one final sort of visit to this line here. It might be worth putting the moving average on as well, because have a little look at the moving averages, see where we are. What am I doing? I want the built-ins, don't I? Okay. Moving average. Have you looked at the moving averages on the dollar chart at all, Patrick, recently?
Yeah, always.
Yeah.
Most of my templates that have corresponding moving averages to the time frame. Then, like I start with the averages, and then sometimes I just like hide them. And because sometimes you don't want it's like I like seeing a line, so I'm super visual. Um it just helps me. Okay, we're above that moving average. I'm not getting scared. But and somebody who's really good chartist, they could do the same type of analysis we're doing, like with just the candles, and they kind of see all these lines we're drawing. But yeah, I like the moving averages. I have a chart after that, Kevin. I was working on a chart today. I didn't post it. It's the correlation of why I think I have another weight of evidence why the U.S. dollar is going to get crushed. It's going to keep going down there for the next foreseeable future there. So I'll show it after.
Okay, I'll hand control back to you in a second. I'm just 200-day moving average. Let's see where that is. Is it going to put it on? Has it put it on? There we are. So it's coming down. Okay, about the 100. Actually, the timing on that might work out about right. Let's have a look. It'll be late December. I'm just trying to work out if it carries on at that angle, the 200-day moving average. When's it going to intersect the red line? And that's late December, early January. But to work out if the 200-day moving average been relevant just lately. And this is the other thing with the moving averages. There's no point just sticking on a random moving average if it's not particularly relevant to the price action. Trying to find the one that's most applicable is a bit subjective. And it depends on where you are in the overall cycle.
Ooh, 150 is not. Yeah. Well,
looking to see it.
Yeah.
Well, yeah,
We've
got some. Yeah, so the price, the index in 2018 bounced off it there. It's been close to acting as support here, so it's possible it could be the 150 moving average, which is setting the target, which would be mid-December. But we'll see. I mean, this is the thing. As the index sort of starts to move away rapidly to the downside, you're struggling to find a moving average that has relevance to it because we're quite early in this move. So it's hard to say. If you've got a nice long steady uptrend, you can find a moving average that fits the price action more consistently, if you like. But at the moment, it's hard to find the moving average that is representative. So that's why I've kind of not been using it just lately. So I think that this support line, for various reasons, is going to be the one that is important. If I quickly show you one more thing, if I zoom out, is that the same thing happened back here. Get this line in the right place. You can see that this period here, price action pierced the support line and attempted to hang on for what's that, 1, 2, 3 months, something like that, and that's what's been happening. I've got too many labels on here, haven't I?
There's a button.
You got 1, 2, 3. We're on our fourth candle here now, so it's going to be Geronimo soon, I think. Down we go, but we'll see. There are others who believe that this is going to turn up and the dollar index is going to go back up to 100 or something, but that's not my view, as you know. So we'll see how it progresses. Do you want me to hand back the screen sharing to you, Patrick?
Yeah, Kevin.
There you go.
Ooh.
Stop sharing.
Share screen 1. Share. Okay. What the hell did I want to show? Can I do Control Z? Yeah, I was working on. Okay, hold on. Let me see. It was the fund rate. Okay, so the Fed fund rate, I've noticed it's been a big macro underlining current, like everything. A lot of a lot of stuff is being derived from this the Fed fund rate. So first I'm going to remove log. Okay, so this is pretty much it. I've done a lot of charts where and look at that. If I overlaid, I had fun overlaying the DXY. And it's not always, like, I'm not too focused sometimes on perfect correlation, but there's a lot of pressure. So the Fed fund rate, check it out here. As the Fed fund rate keeps going down and down, it's putting pressure on the US dollar. And it makes sense because if the government's not giving you enough return to buy to hold US dollars, then less and less people want them. So every time the Fed fund rate has been going down, going back up, the US dollar gets a little push. Fed fund rates go down, US dollar goes down. Fed fund rates coming up a little bit for a little swim above the water. And now I'm pretty sure this is projecting the weakness in the US dollar. Just the fact that you can't hold US dollars. Yes, there could be a milkshake theory, a spike, a liquidity crunch, but it's not going to last a long time. So until the US dollar, I believe, smells that inflation or rates have to go up, I think the US dollar is just destined to follow this all the way down to 74, 81. 81 is pretty much my target right now. There at this base, which is going to have a lot of support. But this is a huge macro driver for everything we've seen in equities and gold. Gold, actually, I'm pretty sure that it's already sniffing out that this will have to go up one day. Like the true market forces, they sense that inflation is coming. They sense that rates will eventually have to go up. And gold, I think, is front running that big times. But for me, this is just supporting US dollar. There's no reason to be long US dollar. Maybe a short term, like those spikes. But look at that, man. Lower highs. There's no reason, especially here. This is actually a good low risk proposition to short it to go down, unless I'm wrong.
If I just to interrupt there, I mean, if the dollar's going to turn down, it can be for a number of reasons, can't it? And we're at that stage in everything that's going on at the moment, I think, where initially, you've probably heard people talk about the everything bubble, where everything goes up, and we're seeing that cryptos are going up. Gold and silver are going up. We've already had gold moving up from 1,050 to $2,000. We're consolidating now, but gold has almost doubled. Silver has moved from $14 to where we are now, and it's looking like going much higher. We've got other sectors are moving up. Commodities, if you look at the Bloomberg Commodity Index, that's moving up now. Look at copper. I mean, copper has had another strong day today. Last time I looked, it was up about 2% today. The stock market's moving up. General equities are continuing to move up on stimulus, hopes, no doubt, and more trillions being thrown at the problem, chucking gasoline on the fire, if you like. And so, equities are going to carry on going up for the same reason that they have been. Cryptocurrencies are going to start going up because they're becoming more widely available. More, young people are investing in them. It's becoming more accessible. It's a relatively small market at the moment, so it's not going to take much for, money to, fairly modest amounts of money coming to cryptocurrencies to send those up to new all-time highs. And gold and silver are going up. Quite frankly, the miners are going up because they're making money. With gold it's $1,700 and silver at $20. That's left, far less than it is at the moment. But if gold was $1,700 and silver was $20, the miners are making huge amounts of money. The all-in sustaining costs are way below that. So that's going to start showing through in the gold and silver miners' bottom line. Their profits. Their annual reports. So the share prices of these massively undervalued, especially junior miners, are going to go through the roof when it's clear to everybody that they've basically got a license to print money. So this everything bubble is kind of here, and it's happening around us and starting to happen now. What happens next would be something's going to break in the system. That's why we've got this 8-year cycle low coming up in in the precious metals, something bad happens at that point. Happened in 2007, and that's what's going to happen again the next 8-year cycle low. I can't say what's going to cause it, but something very unpleasant is going to happen in a couple of years' time to bring it down.
Yeah, it's definitely like huge food for thought there. It's like sometimes I feel like since it's not happened yet, we kind of imagine that it's going to be worse than it's actually going to be. But for some people, it's like it all depends where you are. Like we weren't there in the early 70s or 70s when there was inflation and people were like lining up to buy gas, and it's gonna be, there's gonna be some tough times, man. But it's like so weird. Like we've been having it pretty good there. All my life I think we've had it like pretty good there. We've been living off these low rates, this goody good time stuff there, but. Yeah,
something's going to break in the system,
yeah.
and the gold and silver charts are telling us that something
Yeah.
is going to happen leading into that 8-year cycle. I feel pretty uneasy about it because of the huge amounts of debt that are built up in the system, and I just don't know quite what to expect yet. But my general sort of feeling is that there'll be some kind of liquidity crisis, some kind of financial crisis, whether it's a banking crisis. You know, I suspect pretty much all asset classes will be affected by it, but out of the ashes, gold and silver, I think, will be the winners. You know, as we come out of that 8-year cycle low, it could well be time for general equities, the Dow Jones, you know, the S&P and tech stocks to take a real hit and continue their downward trend, allowing gold and silver to rise to some of these targets that at the moment just don't seem realistic. But you know, that's beyond the 8-year cycle low and yet to be determined. So it's what I'm focusing on at the moment is plotting the course to the peak ahead of the next major cyclical drop. I think I'm going to definitely step aside whilst that develops, because it could be a real mess, and I don't think anybody really yet knows just how it's going to unfold. But I wouldn't want to be caught up in it.
Look at that. Okay, that's the Dow to the gold ratio there. The 1 year gold. Oh, it's had the Dow has been catching up to gold recently there, but we have to see how the year closes. But definitely we're starting to get a red candles. So this is where the beginning of the transition for the next leg down in gold, outperforming the Dow, just like we had in the 70s, 2000s. I consider this like a bear market rally within a downtrend that's already started since 2001.
Well, one thing you can say about that recent sort of price action is that the move from roughly 2013 through to 2018 looks like a bearish rising channel that we've now broken down from, and the candle, the latest red candle there, doesn't look to be developing any kind of bullish chart pattern to me. That looks like a bearish rapid drop. I can't see any bullish interpretation of that at all.
No, yeah, it's a retrace. What is that, like 30%? Where's Fibonacci? Where's my Fibonacci?
Good old Fibonacci. He does it every time.
Kevin, when you do Fibonacci, do you do it on the wicks? I love closes, but do you do it on the absolute price?
To be honest, Patrick, it's what fits best, because you're looking at how the price action reacts at the Fibonacci levels, and they decide themselves. So the Fibonacci reaction will show you where to place it. So
here I have
it will usually be on the body of the candle, but it isn't always. And it's again, you know, there's no hard and fast rules with this, and you're finding the lines of best fit. And it sounds like you're fiddling it to make it fit, but you're not, because the Fibonacci, the reaction of I'm explaining myself very well. The price reaction that is displayed by the candles is prices bouncing around at those Fibonacci levels. It doesn't hit it like a solid brick wall. It kind of bounces and moves around a little bit. So the candles aren't going to be perfect, but you're going to be able to see the footprint, the image of the Fibonacci levels.
I agree. Look at 38% retracement there, pretty much. So
Yeah,
I
you can
guess,
see there's a significant level in there.
yeah. Wow, Kev. I don't know. So for me, it's not the end of the gold bull market. It's not. I think it's just it's pausing. I think Bitcoin's leading actually right now, but it's leading.
The cryptocurrencies have front run the gold and silver breakout, and I think the way it's timing now is that there's going to be a pause. If we're going to leave a takeaway message from this, it's going to be that we've had a fantastic run in cryptocurrencies. Many of them have been up 30, 40, 50% over the last few weeks. I've done very well out of it and managed to make around about 50% on what I've invested in cryptocurrencies. But I don't think I'm going to take my funds out of cryptocurrencies because of the consolidation that's coming. We could see a 20% pullback into mid-December. But that doesn't worry me because the targets are so much higher, and I don't try to time moves in cryptocurrency when they can move 10% in a day. I'd rather just sleep easy at night. So I'm not going to be messing around moving money in and out of cryptocurrencies any more than I have done with the gold and silver miners just lately. I've left my investments alone, knowing that that this is a bullish chart pattern that's forming, and the recent drawdown is going to be wiped out by the move up, and it could happen very quickly, and you could end up missing out on 10-15% moves in the space of a day on some of the junior miners, and that can leave you feeling a bit gutted. So I'm still sticking with and I think, Patrick, you're probably thinking 1850 is more likely to hold, or 1800 is more likely to hold, but I think for me to feel happier about it, I prefer to see gold price just very temporarily dip down to 17 something, whether it's 17.99 or 17.80. I think I'd feel a job done if we get 17.80 and somewhere below $21 in silver. It might not happen. I'm not saying it's going to happen. I wouldn't stake my reputation on it because there's going to be, it's a strong bull market. Price could reverse to the upside for a number of reasons, and we. I could be wrong about this, but I think so. I think 1780 is still my target, so we'll see.
It's just the close. So as long as I have a monthly close above, let's say 1820, or above the 1 year, or 1820, 50, I'm a spike intraday, intra week to seven, like in the 1700s, very possible. We've seen it, when the panic selling starts, it could really go down. But if we're truly in the bull market and the uptrend, I think we should have monthly closes above important levels.
Yeah, I agree with that. Yeah.
So it could go down to 17. That's a lot of people, like, let's on Twitter, they're afraid, but me, I'm the monthly guy. Intraday, crazy stuff could happen, especially silver. So the hitting 20 on silver, like 2-3 down days at 6-7%, it's going to bring us there, right? Like, it won't take a lot to bring us to $20. So I'm not, but I really expect it to bounce and float back up and close at its natural monthly or quarterly defined support levels.
Yeah, it'd be interesting to see when the cryptocurrencies start to cool off.
Well, look at whether
that's a bit of a trigger for the miners. We'll see. I don't know how much correlation there is between the two. People investing like I do in both and moving the money from one to the other.
Yeah.
But it will be interesting to see if a cooling off of the cryptocurrencies sort of coincides with the start of the move up in the precious metals. We'll see.
There's a lot of people I think there's money to go around for everybody. I'm not too afraid. If the chart says you're going up, I don't care about somebody else's chart. It's like
no, absolutely.
It doesn't make sense, guys, to stress yourself with narratives that you have no control over. If the chart's bullish, the chart's bullish. If the macro evidence is bullish, it's bullish. Not like everything could go up together, guys. I'm not too worried about that. There's not just one Tesla going up and Apple staying down because the money's going in Tesla. It doesn't work that way. Like, they're both going up,
Exactly what Patrick said. I agree with you totally on that. If the chart is telling you a message, then that message is valid.
Look at that candle, Kevin.
Until or unless something happens to change that message. But bullish charts are bullish charts, and precious metals are screaming bullishness at the moment. Yeah.
And Bitcoin also, man. Look at this. It's insane. Look at that.
Yeah, I think it's destined to reach that sort of somewhere between 1900 and
Yeah.
19,000 and 20,000 level, and cool off just below that all-time sort of high level.
I have to put log. If I don't put log, it doesn't make sense anymore. It's moving a lot. It's moving a percent like logarithmically now. The Bitcoin.
Yeah, and there's another perfect arc if when you draw one. So these arcs are all over the place, and every arc contains a wedge of some sort as well that the price action breaks out of. It's spooky how they just repeat over and over and over again. Once you start to see the patterns, you can spot them as they're forming.
Yeah. Good stuff, Kev.
So, yeah.
The one here. There's another one here. There's another takeoff arc right there, right? This one here.
Yeah. You get arcs within arcs. You get wedges within wedges.
Jesus.
Yeah.
That's powerful.
Yeah. Yeah, and if you can draw a line as a wedge from the from there, draw a diagonal from the 2018 high, and that gives you your breakout. Take it down lower as well. There's one there, and there's also the one lower down that sits on top of the candles in 2018 and 2019.
These ones here, yeah. There's a lot of bullishness.
And in fact, it's a descending channel in there as well. So that price action from 2017 to 2019 is contained within a descending channel.
Then explodes out.
Just like we are at the moment in gold.
Yeah. So this is, guys, that's why I believe, not that I initially believe in cryptos, but I believe in technical analysis. So if you see patterns like that panning out, that means if gold's pattern is the same, it's a question of time that it's going to do the same thing, or a high probability that it should resolve in the same manner, guys.
I was totally uninterested in cryptocurrencies. I'll be completely honest with you. I just wasn't interested in them until I started analyzing the charts and just thought, just the same as gold and silver. You can analyze them in exactly the same way. And when you start looking at a chart that's at $40 and the chart, the analysis tells you it's going to $800, how can you not